When you drill down into the details of the LinkedIn offering, a couple of things jump right off the page. Now, first, this business is growing and growing fast indeed. Revenue growth, in fact, is accelerating. And second, LinkedIn is bringing a profitable business to the marketplace with aims of turning it unprofitable. Yes, they're warning that they're going to lose money next year. Kind of an amazing plan for a company looking to sell shares to the public. But let's look at how LinkedIn derives its revenues, because unlike, say, Facebook, it depends on nearly all of its revenues from advertising. LinkedIn has three sources of revenue. Now, marketing solutions, that's targeted advertising, is 34%. Premium subscriptions, that'd be users who pay extra so they can do things like contact other users, that's 22% of revenues. And hiring solutions, 44% of revenues. Now, that's companies paying for the right to sift through LinkedIn resumes. Now, if you crunch the numbers, you begin to see that LinkedIn's biggest growth engine is this hiring solutions business. It's very interesting, because if you look at the overall LinkedIn revenue growth from 25% year-over-year revenue growth to 43%, well, 43% is a big number when you're talking about growing revenues. But if you look at the growth rate of LinkedIn's hiring solutions business, in the fourth quarter, that business grew at 190%. Buried in the S1 filing, the company says that 4,800 companies are now using LinkedIn's hiring solutions. That's up from 23% at the end of last December. Now, the kind of corporate business for LinkedIn that they're getting here could be great news for investors, especially if U.S. employment ever picks up again. But a note of caution, those revenues are typically signed up 12 months in advance. The revenues are recognized ratably over the course of a year. So a sudden downturn in that business could be obscured in LinkedIn's investors until it's too late. Now, Ari Levy is one of the 65 reporters and editors covering technology and innovation and business here in the San Francisco bureau of Bloomberg here. And I know you've been covering this LinkedIn deal. The investor excitement's driving the price up. Is that a surprise, or it already came with a pretty steep valuation?
Yeah, it's probably not a surprise when you look at not just where 2010 revenue ended up being in sort of the up 100% plus. But then if you look even at the first quarter of 2011, almost $100 million in revenue in the first quarter, 93 million, I think the number was. So you're talking about, a $360 million run rate for a company that just when they filed their S1 a few months back, we were talking about being a $100 million company. So the fact that they've come out with these numbers that are substantially bigger than what we had originally seen, it's probably a justification in the increase in the price.
It's interesting to see the ramp of those revenues. I think we pulled up a chart there that showed how the hiring solutions business, which I was highlighting, is growing at a really big rate, and it's their biggest business now at a very late stage for this company.
Sure. But you also look at what's happened in Silicon Valley over the last couple of years where there has been an enormous amount of hiring in technology across the board, really. And that's a natural place for recruiters to go who are hiring for technology, because it's a technology company in Silicon Valley.
Well, I think that's kind of interesting, though, because they've got so many resumes on LinkedIn now. It goes well beyond the world of technology. I mean, it almost feels wrong to talk about a hot hiring market when so many people in America and all over the world are out of work, people who used to have work. The unemployment rate surging in this country, and yet LinkedIn is benefiting from this. You wonder if this is as good as it's going to get because tech hiring is hot, or if the rest of the economy's pickup might lead to a bigger pickup and a bigger rate of growth for LinkedIn.
Sure. So there certainly is the cyclical nature of the economy and how much that affects LinkedIn, which we really don't know, because their growth really has only been in the last few years. So there haven't been a whole lot of cycles where we've been able to see it. And then, of course, you also have Facebook, where a company called BranchOut is trying to compete with LinkedIn on Facebook, and that's something we haven't seen either. So there are a couple aspects to this where LinkedIn could be challenged going forward.
Well, it's interesting to see them power through anyway. Ari Levy, glad to see you covering this thing. Anxious to see what happens when the IPO actually comes, probably later this week. All right.